So here's our investment priorities. The first thing we always want to look at is what is a trend. Then I look at the seasonality. Then I look at the chart pattern. Then I look at the momentum. Then I look at the sentiment. Hey everybody, Courtney Smith here. Just wanted to say, hey, how's it going? Give you a little bit of an insight into what we're doing here. Now, of course, we always look at the fundamentals as well. The fundamentals are incredibly important. We only buy stocks that have accelerating earnings, and they're cheap. And speaking of cheap, this is cheap information here, so please understand it. Now, let's take a look. Lots of stuff happening. Oh my God, it's getting complicated out there. But here, let's take a look. First of all, we've got this, formation here where we failed to make a new high. I've been talking about the purple predictor. It's been fantastic. But on Friday, we had super heavy volume, and the market was down just a smidgen. Now, that's very unusual to have a very narrow range day, but huge volume, and that caused the purple predictor to start to go down. Is the smart money starting to sell? Second thing that makes me nervous is that we failed to make a new high. In a bull market, we should come up, we should go down, we should go make a new high. We didn't make a new high. So here's the deal. If we break below this level here, which is basically 2350 on the S&P, then I'm going to say that this bull market is over and that we're going to have a correction. Not a bear market, but a correction. 5%, probably not 10%, maybe like 3 to 5%, something like that. Dow Jones, you can see our DI plus chop sideways, DI minus also going sideways. So there's not a lot to tell us here. Let me just go back for a second. Okay. Wanted to double check something. Okay. So, but where's the action? Here's where the action is. Look at this. Here's the NASDAQ. We're getting up to those highs. We're not failing at those highs yet. We're making new highs. And here the market was a little teeny bit higher on super heavy volume, which makes the purple predictor very strong. So the action is over in the NASDAQ. It's not in the Dow or the S&P. So this is where we want to put all of our attention. Now, seasonality is, once again, it's starting to get a little bit shaky there. Look at that thing. We came down. The purple predictor has collapsed. We came down. We're showing a little bit of strength here late in the week, but nonetheless, I'm getting pretty nervous. And a break of 133 will turn my seasonality indicator bearish. Okay, so we need to keep a close eye on this. I don't think it's going to happen this week, but it's going to be coming up. It could come up very soon. Now, we're looking for the market to rally up into May. Here we are here in the middle of March. All the scenarios say we're going to peak out here in mid-May and then have a dip. So we could just keep grinding higher for another 2 months before we get to this peak and then have some type of a sell-off. So we obviously need to keep a close eye on that. Yield curve still, it's letting the pressure off, so that's bullish. Asset allocation, bullish. Stock market risk indicator, who cares? Global shares took off. Now, we've been talking about it. I'm not in any of these shares, but we've been talking about how it's been pretty bullish. This is really the first time we've seen the European shares, the global shares, stronger than the S&P or the NASDAQ or the Dow. So we might start to get more interested in this next week. Japanese shares made a new high early in the week. Then we got a little bit of a sell-off. I still think we want to be long Japanese shares. Bonds got a little bit of a rally, but I just think we're in a trading range. And so who cares, right? If we're in something in a trading range, I don't really want to trade it. Our indicators, here's the 10-year treasury, pretty choppy. Price of gold, suggesting higher interest rates. 10-year treasuries in Germany, higher interest rates. But the CRB, which is the chart in the background, that's suggesting lower interest rates. Nonetheless, still looks like the fundamentals are over on the bear side, looking for higher interest rates, lower bond prices. Now, the dollar has cracked down. We got the Fed. The Fed came out, raised interest rates, and immediately the dollar went down. And I think that what they were looking for was an even stronger statement of higher prices than the market. The market thought that the Fed was going to come out and say, oh man, we're going to raise interest rates to 1,000,000% day after tomorrow. They did not. And they, even though the Fed came out and was quite bullish on the U.S. economy, the market somehow or another said, you know what, we just don't think they're going to raise it as strongly as we thought. And that caused the dollar to sell off. Quite surprising to me. I think it's going to turn around and go back up again, but don't have a position. But if the dollar's down and gold is up, still don't want to trade this either. Our gold indicators, most of them are saying, we have 2 out of 3 say higher prices for gold. 1 says lower prices for gold. Oil, it's doing just what I thought it should do. We're getting a rally here, but this rally is not going to live very long. Why do I know that? Because because volume is going down. Volume is going up when the price goes down. Volume is going down when the price goes up. You always want to see volume confirm price. And what it's doing is it's confirming that oil is going to continue to move lower. U.S. producers are cranking up their production. They're taking market share away from the Saudis. And that's what's causing this crackdown. I kept talking about it for months, and it never happened. Finally, it happened. All right. Hey, that's it for me for this week for TradeSmith. Really enjoy having you freebies here. But, of course, fully paid up members are cooler. I mean, come on, let's be honest, all right? So, hey, fully paid up members, hang in there for just a minute, and we'll get over to you right away.